All right, let's get a move on then and focus in on another corporate voice. Lakshmi Cement came out with a healthy set of numbers. Revenues up 12%, margins as well expanded, and volume growth was at 16% on a year-on-year basis. Let's connect with Shailendra Chouksey. He's the Wholetime Director at Lakshmi Cement. Thank you so much for taking time out. A healthy set of numbers, strong volume growth for the quarter, and that really seems to have outpaced what your peers as well have delivered. What have been some of the key volume drivers, and take us through the realizations as well for the quarter gone by?
Well, in our case, our production was higher by about 12%, while our overall sales were higher by about 14%. And that is where, we had a much better growth in terms of volume compared to what you saw as an overall industry. In terms of realization, there was a slight fall. But overall, because of the good increase in the volume as well as a good control on the costs, we could post much better EBITDA numbers. If you want to know the exact figures, our sales stood at about 23.8 million tons, 23.8 lakh tons, that is 2.38 million tons, while in the corresponding quarter of the previous year, it stood at about 2.06 million tons. So that makes it about 60% higher. And if you take the realization number, then it was almost marginally different, about 40 rupees a ton, but otherwise it was almost the same as the previous quarter.
What about pricing trends? We understand there's been some recovery post the monsoon, but can the elevated pricing sustain?
Well, there has actually been a decline in the prices even compared to the previous quarter. So what we are seeing is that there has been a trend of prices going down in the second quarter, which is not surprising. And there's the usual phenomena that being a monsoon quarter, the prices tend to take a dip. Though the demand was good, I can't complain on that account. But the prices were, as I said, marginally lower. And there is certainly a room to improve the prices, which is again as per the pattern that we have noticed in the previous years. That in the third quarter, once the demand picks up around Diwali, the prices also show an improvement. And we have recently witnessed some improvement in the prices in some of the markets.
Okay, on volumes now, strong growth. Do you actually see this being more about a pent-up demand, or do you actually see some of these growth drivers sustain?
There has been a good uptick in the demand in the rural market especially. And that I assume is on the back of a good monsoon that we witnessed last year. There has been a considerable increase in the outlay on the Manrega, and of course this year too monsoons are good, so the mood is very buoyant as far as the rural market is concerned. In the urban market, which gets slightly clouded on account of the real estate market seeing a dip, which has been going on for quite some time now, and which has not really seen any major traction. The other area of probably disappointment has been that the infra has not picked up to the extent which it was envisaged, and possibly because the labor hasn't fully returned, from the areas where they had gone back. So partly they have come back. Partly we expect it will come back after Diwali or Chhat, as they say. And once that is done, I am very sure and hopeful that the infra too will pick up at that time. So if there's any slackening of the demand on account of the pent-up demand having been met, then possibly the infra will take over. So I see, therefore, in the coming months, right up to the March, I would say, a good period of demand, cement demand.
Sure. Help us understand what was the capacity utilization trend in the quarter gone by as opposed to the rest of the industry, and also what levels do you expect your capacity utilization levels to be at going forward?
You see, the industry definitely is fairly, there is a lot of overhang as far as the overall supply availability and the demand is concerned. So while I would believe that the industry is operating at about 62-64% capacity utilization, in our own case, we find that while our cement capacity utilization has been at around 74-75%, the clinkerization utilization in this quarter has been almost at about 94%. So that is fairly high, but the cement capacity utilization has been at about 75%, and which to my mind is also good in these, considering these times, and also considering the fact that that we have just come out of the Q1 when we had seen about a month and a half of total closure.
Right. Mr. Chouksey, cement companies are in a bit of a worry because of the increased fuel as well as freight costs. What kind of margin impact is this going to have going forward?
Both prices have seen an increase, especially if I compare with the Q1. But I think the major impact is yet to come, because we had some stocks and therefore there was some of averaging out. But now the petcoke touching about $95-97, I think going forward the fuel prices seem to be on the uptick, and therefore if the prices do not increase, so I mean of the cement, as the realizations don't increase to capture these increase in the fuel prices, obviously the margin can come under pressure. But I'm sure the increased volumes and also the seasonal improvement in the pricing should take care of that. That is what my own belief is. Then our own company been working a lot on the efficiencies, on our supply chain efficiencies. All that has collectively given us good results, and I'm sure going forward too, these improvements will continue. And hopefully we should be able to take care of this increase in the fuel prices.
Okay, Mr. Chouksey, we'll leave it at that. Thank you so much for taking the time out and joining in with that quick insight into JK Lakshmi Cement's numbers. Holding out steady for the market. We're clinging on to 12,000, and it's a great market breadth. HPCL is now up 7.5%. PVR has perked up 5.25%, and SBI is your leader within the Nifty 50 names with a good 4.5% bump up. Add to that Tata Steel as well as Hindalco too. We'll take a very quick break, come right back, lots more lined up.